Welcome to Real Estate Exposed, helping people in San Diego buy, sell, and refinance their biggest investment, delivering you timely truths, exposing important issues, and helping you get into the right home. Here are your hosts, real estate expert Daniel Beer, top-ranked professional by sales volume at one of San Diego's largest brokerages, and his mortgage partner, Todd Pianin, with over $2 billion in funded loans.
Yo, good morning.
Good morning to you, Dan. Happy Sunday to you. And we are, it's our favorite time of the year, Dan. I have to say this, and we want to get right into real estate, but we're going into football season.
Yeah, it's going to be great. We are excited. I'm excited to see what's going to happen in the November ballot with the stadium. It's just, I don't know. I'm growing more and more hope.
I think it's going to happen.
Again, have you seen these renderings? I can't imagine seeing San Diego County downtown. Seeing downtown with that second stadium, all the revitalization that would happen all throughout East Village, East Village, like core East Village, right, would end up reaching to like 25th Street or something.
Awesome,
it would just be totally the coolest thing ever. You'd have it would be
awesome. A
great place to visit and make this even a better city than it already is. That's for sure.
A Super Bowl city.
A Super Bowl city with
and
that.
Did you just see my backup quarterback, the rookie Daz, play the last 2 weeks? He's been doing awesome for I know all you Charger fans don't like that I'm a Cowboys fan.
No one's watching the backup quarterback from the Cowboys.
He's looking awesome.
No, we just probably lost half our audience.
Probably.
So you're listening to Real Estate Exposed. We're back with you. We're going to talk all things real estate to help you get positioned for success in today's market. I'm Daniel Beer of the Daniel Beer Group at Keller Williams, and Todd Pianin, Home Street Bank, our trusted lender. Should be yours too, by the way. If you're thinking about refinancing a property or you're making a purchase, give us a shout. Number to reach out to is 800-676-2420. And Todd,
I hate to say this before you talk about this one thing, though.
Yeah.
I'm trying to recruit some new people to come work for Home Street, and one of the things that we had a market survey come out. Did you realize that Home Street is like beating Bank of America, beating Wells Fargo
in what?
In conforming government on their rates. Jumbo.
Oh, rate.
Jumbo. I mean, it was unbelievable. It's a huge, and I mean, a lot of the smaller shops like. I hate to say it, but like Caliber, Movement, we're crushing them in pricing. It was unbelievable. I sent this out to like all these recruits, and they're like, when can we, they want to get past this little refi boom that they're having right now, but the rates are just, we're just killing it in the survey.
Well, the reason that I do believe it is that when we have buyers that are, getting ready to purchase a home and they're working with our team, a lot of them will already come with a pre-approval letter from anywhere. Okay, let's just call it from anywhere. And that's a good thing, by the way. I'm glad to see that the public is starting to become aware that that's actually step number one. Going out and looking at property is truly step number two, even though most people put the, cart before the horse.
Right.
So anyway, it's good that they're coming with that already, but we always will encourage them. Let's get a second competing quote for two reasons. One is that when you get a second quote, if it does not beat what you already have, it just validates that you have a good one. So you can't lose on that end. And then if it does beat it, then you've won.
Right.
There's no way to lose with that, with getting a second opinion and also being exposed to product that, loan product or loan vehicle that other lender may not have had access to, because everyone does have access to different things. You have access to some things that others don't, and they have access to some things you don't.
Right.
So the reason I know that, or it makes sense to me that you are definitely doing great on rate and giving people deals that they can't walk away from, is that we're seeing a lot of people leaving, the lender they thought they were going to use and voluntarily choosing to use your company, and specifically you and Taisha, because it makes financial sense to do so. So
I was just shocked and so proud of our bank. So anyway, back to you.
So here's the deal, and we were striking up a conversation about the fact that everyone's truly paying a mortgage. Okay, if you're renting and you think you're not paying a mortgage, fact is you are. And this was a conversation we were having over dinner about 10 days back or so. And so interestingly enough, there's
people don't realize it.
Well, they really are.
Yeah.
They really are. And in fact, a guy from Harvard University, as the Joint Center for Housing Studies at Harvard University, quote, explains, and again, this is coming from Harvard, quote, households must consume housing whether they own or rent. Not even accounting for more favorable tax treatment of owning, homeowners pay debt service to pay down their own principal, while households that rent pay down principal of a landlord plus a rate of return. So let me repeat that.
Yeah, do it one more time and do it slowly and put it like that guy was a little over our heads, so put it in English.
I'm going to repeat it, but I'm going to interpret that last line because that's the last line that needs interpretation is the one that's just going to irk you, okay?
It's going to piss you off.
Households must consume housing whether they own or rent. Not even accounting for more favorable tax treatment of owning, homeowners pay debt service to pay down their own principal, okay, to pay down their own principal, while households that rent pay down principal of a landlord plus rate of return. And then the quote goes on to say, that's yet another reason owning often does, as Americans into it, end up making more financial sense than renting, end quote. Here's the key line in this, and this is what really strikes me. It's the concept that I've always intuitively known but never put into these kind of words,
right?
Which is that households that rent pay down the principal. So if you're renting, in other words, you're paying the principal of your landlord plus the rate of return that landlord has invested into the property for.
Right.
Okay, do you get that? You're paying their mortgage
for them,
and you're paying them a return. You're making their investment profitable. So you're paying above the mortgage. Right? And that makes perfect sense. Why would someone be a landlord if they were losing money? The reason they're a landlord to you is because not only are you paying their their mortgage, their taxes, their insurance, their maintenance, but you're also giving them a rate of return.
So Dan, I'm gonna be the renter for a second, and I'm gonna call you up, and I'm gonna say to you, Dan, I pay $3,000 a month in rent right now.
How much? Sorry.
So let's say $3,000 a month
Sure.
in rent right now, and I mean, I can't really afford to buy something in San Diego if I'm paying $3,000 a month in rent. I mean, what would you say to that person? I mean, tax. If you take the tax consequences out of it, it's a $3,000 a month rent payer is actually like somebody who's paying $4,500 a month in mortgage.
It's astonishing that so many people continue to think that. When let's just put this in a really logical, simple terms. The person renting their home out to you only would be doing so. Okay, I own rental property.
You do?
My rental property, my tenants are paying my mortgage payment. This is fact, by the way.
Right.
They're paying my mortgage payment, my insurance payment, my projected maintenance costs.
Right.
They're paying for my HOA fees.
Right.
Where I have HOA fees on condos.
Right.
They're paying for all that, and they're paying for a rate of return for my positive cash flow. They're paying for all of that when they simply could have just purchased an equal property and been paying far less. Now,
but here's my question for you. On that.
Yeah.
So a lot of people listening right now who have money to buy real estate who will say to you, I don't want to be a landlord because of the headache. And, you know, I don't think the return on investment is as good as the headache that this tenant can cause me. So my question to you is, you're a landlord. You've been a landlord. You've been a landlord. I mean, as long as I've known you, you've owned rental property. So is it that big of a headache?
It's something that you definitely have to go into eyes wide open and understanding what you're getting, okay?
Right.
And we've talked about that when you're going to be a landlord, you need to understand, you know, you have to have a lot more figured out than some people sometimes realize.
Right.
How are you going to collect rent? What's your policy if they pay late? Are you allowing pets? Are you not? Can they smoke? Can they...
Right, but if they work with you or your team, let's just say for the sake of argument, to help them buy an investment property, you're going to help them with all that stuff, right?
We're going to help them get it rented.
But you also help them understand all these things that you're talking about.
Oh, along the way, absolutely. To make those decisions, yes. Sorry. Okay, so I wasn't catching on to your question.
Yeah.
That absolutely, yes. There is a lot to understand going into it.
Right.
So I'm not saying everyone needs to turn into a landlord.
Right.
But know that when you're renting, you could be owning the property and paying less because you don't have to pay the rate of return that you're paying your landlord on top of covering all their fees. Now, Todd, some people would say, well, that all sounds great, but I don't have a 20% down payment.
Which is a big myth out there, right?
That's the big reason people don't purchase.
Right.
Well, I don't want to bet, what about that 20% down payment?
Right.
What do you say to that?
What do I say to that? I say, first off, if you're a veteran, you probably don't realize, even if you were in World War II, you can put down 0% and get a mortgage. You can do a conventional loan with 3%. You can do an FHA loan with 3.5%. We can go to high conforming with 5%. So there's all kinds of programs out there. We have first and second combinations. We have all different types of combinations of loans out there.
In fact, at some price points, especially what I'm seeing is that when you're at, say, under 400, under 500,000, the majority of offers we see coming across our desk are less than 20% down payment.
Oh, for sure. Because when we cross qualify for you guys all the time, I mean, it's 3%, 3.5%. I mean, it's basically what they're putting down, almost what they're putting down in their security deposit.
Exactly, and precisely. So that's something that you want to connect with us. You're listening to Real Estate Exposed. Reach out. Talk to Todd. Talk to his team at Home Street Bank.
Or talk to Dan and talk to his team at Keller Williams, Dan Beer and Associates, beer like the drink. Or you can find them at SanDiegoHomefinder.com.
Phone number here for you is 800-676-2420. Don't forget one thing. If you're selling a home and you're stuck relying on these home valuations that everybody else has given you, CMAs, Zillow, all that junk, you're looking at the wrong thing. You should be going after a market positioning report. The only way to get a clear idea on where your pricing strategy should be. Get your free market positioning report at valuesinsandiego.com. That's valuesinsandiego.com. Hey, what's going on? We're back with you. It's Real Estate Exposed here, News Radio 600 KOGO, and we're going to talk market, okay? Your San Diego market update.
Everybody's like freaking out right now, Dan, because it seems to me like, well, first off, lenders are way behind because there's a massive amount of refinancing going on. So I don't know if you're
We're seeing a lot of lender delay, specifically out of the big banks. Like anytime we have a Wells or a B of A or a Chase or anything like that, we know we're going to have a delay.
So like a 30-day escrow, I mean, are you seeing, besides working with us, but are you seeing like 30-day escrows taking 45 days, 60 days? Are you preparing your sellers for this kind of stuff?
What we're doing is
because the problem
preparing. Yes, we are preparing for to expect that it's going to be about 45 right now,
right?
Just temporarily, and hopefully it'll go.
It's because of Brexit. I mean, it's because that one day, that 3-day drop that everybody locked in 60 days ago. So I mean, I think that once you get through this snake, you're gonna.
But a lot of it is refinance activity. And what we're seeing is there's definitely you're in the beginnings of a shifting market.
Right.
Okay, you've heard it here. You've heard. I promise you, this is happening. The market is beginning to shift. You're in the very early stages of it. Here's what we're seeing. Okay, here's where you see the early signs of a shift. First of all, one of the signs is that if you go anywhere, as far as media is concerned,
right,
everything's positive. Everything is positive. Builders can't build. I mean, they want to just build more. Everything is massively positive.
Right.
But when you really get to the meat and potatoes of it, when you have our vantage point, we just really, honestly, we have a unique vantage point in that instead of doing 3 or 4 deals a year like your average agent in San Diego will, we're gonna put under contract somewhere around 220, 230 homes this year. So when you have when you have that kind of vantage point, you can see further into the horizon.
Right.
And here's what we're seeing. Little things in the course of a contract that were not a big deal 6 months ago or were not a big deal a year ago.
Like what?
Like, let's say an appliance doesn't work and you're in the middle of escrow and you have an appliance that doesn't function or
dishwasher.
Or there's just a little, a little bit of growth under the sink, but it's localized, or there's just anything, maybe the house, maybe the paint isn't to someone's liking. Little things today are becoming big things. See, a year ago, if the microwave didn't work, the buyer said,
I'll buy it.
I'll take it. I'll have it. Who cares? I'll fix the microwave, which, by the way, is actually the sane thought. The sane thought is, a microwave doesn't get in the way of where I live.
So let's back this
Okay.
up a second. So are you telling me you're having a harder time keeping deals in escrow, or agents in general are having a harder time keeping deals in escrow because
Correct.
of little things are popping up?
Little things are turning into big things. And so you see that what's happening is that buyers are still willing to step up. They're still willing to pay. They're still willing to, be the next best sale.
Right.
But they need it really perfect. Little things are getting in their way. Little things that just were not going to even matter, be part of the conversation a year ago, are at the center of the conversation today. Here's another sign. Massive amounts of contingent offers. A year ago, we might have done 2 or 3 contingent deals all year.
Right.
At the moment, as we speak, we have about 7 of them under contract, okay? We're seeing a lot of contingent offers being written. So what does that mean? It means that your buyer that was extremely confident a year ago about making an offer,
Right.
and knowing, hey, I'll sell my home in a minute, no big deal, I don't have to be contingent, that buyer now needs to know that their home is sold. They'll still buy, but they need to know that their home is sold. Okay, and so that's what, at least us at the Daniel Beer Group at Keller Williams, if you work with us,
Well, you
get
guys,
this really high vantage point in that we see more.
Well, not only that,
Okay.
but I mean, you guys know how to structure this. We were meeting with your buyers yesterday, your buyers team yesterday, and we were talking about the fact that you guys really know how to manage, the listing and the buy at the same time. It's pretty cool. So we do a lot of those deals for you and how to concurrently close. And we just got a deal that approved yesterday that was a contingent offer that the seller, the buyer, one of your buyer's agents sold them a home, but you guys also sold their house. So, was your
There's
listing.
an art to that for sure.
Yeah, I mean, you guys got that art down pretty well.
But, these are the early signs that we're seeing. More contingent offers.
Days on
Deals
market.
falling apart over small things. Days on market, yes, they're growing. They're growing across the county.
So not your team, let's just say.
Ours are growing a little bit.
No, but
we've gone from 14 days on average, and we're now creeping toward 20 days on average. Now, that's still a lot better than the market average. We're still far better than the market average. We'll sell homes about 2 times as fast.
What about fallout rate?
But it's growing, and we're seeing a little bit more fallout based on small issues that shouldn't be issues.
So let's just say normal, from my understanding, because I have a high level, because I deal with a bunch of owners of real estate companies. Normal, they call them DFT rates, are normally 15 to 20% of what they put into escrow. So meaning that pending sales that go into escrow, 20%. You take a company like, let's say, Windermere Homes and Estates, that's going to do close to $2 billion in closed transactions this year. They actually have to put $2.4 billion into escrow to make sure that they're going to close $2 billion. For you guys, would you say your percentage is lower than the norm?
I wish we had that measured. I'd tell you it's probably roughly, just on the way it feels, it's probably about 1 in 10. So it just has to do with
10%.
Yes, but the issue is that it has to do with qualifying people harder at the time of purchase. That's something we're going to talk about coming up next out of the break.
That's a great
because what happens is that most people don't know the right questions to ask in order to make sure you understand who you're doing business with when you're a seller getting into bed with a buyer and taking your home off the market. That's something you want to understand. And I'll remind you of this. If you're overly focused on price and you want to know your home value and you're relying on CMAs, look, every agent on planet Earth has a CMA. That's what you get like day one of becoming a real estate agent. What you need is a market positioning report. That's what tells you where to position yourself into the market, into this world of virtual shelf space, as we call it, and understand how to strategically drive traffic to the sale of your home. To get that market positioning report, you visit valuesinsandiego.com. It's a free report we will be happy to personally provide to you. Okay, and the first thing that'll pop out is your traditional valuation, but then we will follow up with the market positioning report. To get that free report for your unique home, visit values, that's plural, valuesinsandiego.com. Coming up out of the break, we're going to discuss the questions no one asks their buyers when they're going under contract, when they're showing their home, when they're allowing people to invade their life. There's too much fallout rate, as you heard from Todd. We're going to show you how to decrease the odds of that happening for you the way we have for our clients. That's coming up here next on Real Estate Exposed with Daniel Beer and Todd Pianin. So you're thinking about selling your home, And in fact, you are into the process. You're inviting buyers into your home. And if you're like most home sellers in San Diego County and across America, you're only vaguely aware of who it is that you're thinking about doing business with. You're only you're accepting an offer. Let's fast forward. You've just accepted an offer. Right. What do you know about this person typically? Okay, what does someone know about somebody they've just done a deal with?
Whatever the realtor will tell them.
But they know they might have a pre-approval letter.
Pre-approval letter. Maybe they'll know the FICO score. Maybe they'll have proof of the down payment.
Proof of funds. Yeah.
That's pretty much all they'll know.
That's about what you typically will know.
Right.
You know, depending on what agent you were working with on the other side, maybe you have some kind of letter where it tells you about, their kids
family,
and they love the house and some kind of fluff job, right?
Right.
That's typically all you know. So you're listening to Real Estate Exposed. Daniel Beer Group at Keller Williams, and Todd Pianin of Home Street Bank, and his partner Taisha. Todd and I having a discussion here over just how unbelievable it is and how much fallout there is in the marketplace where people lose deals that end up never coming back.
Right.
And the reason that so many escrows out there are lost, or one of the big reasons, so many escrows out there are lost and there's so much fallout and people lose the deal that they thought they had, sometimes when they're halfway to Texas already, is because they don't properly qualify the buyer they're doing business with.
How about we do it this way? Because, I don't want to we like to educate our listeners, and so I think that why don't I ask you some questions on how you do it and what you guys do to sort of properly educate what, as we said, our home selling seminars, how we, you should expect more from the realtor you're working with, not even just the neighborhood agent. But I mean, let's talk about it. So Dan, you guys get, let's say let's do it from both sides. Let's talk about listing sides first. Okay. So if you get a listing, you have a listing and you get an offer that comes in from somebody, let's call it Frankie Sue, and he's got a pre-approval letter, and he writes a nice letter and sends you some pictures, shows you he's got proof of down payment, maybe gave you a pre-approval letter with, an electronic approval, from Fannie Mae saying, yes, they'll buy the loan. Is that enough for you guys?
See, what most people are only going to have is that pre-approval letter and those proof of funds, right?
Right.
Just like that. Here's what you really need to know. Here are the questions asked.
Right.
What do they do for a living?
Why?
Okay?
Why do you ask that question?
You want to understand what is the makeup of this person. By the way, it also will treat the way you sell to them. You're going to speak to an engineer different than you're going to speak to an artist. You're going to appeal to different parts of them. You're literally going to speak differently to them. Okay, you're going to sell differently to them.
What if they're an attorney?
You're going to speak differently to them.
Right.
Right. So you want to understand who are they?
So what do you tell yourself?
What do they do for a living? That also might clue you into something. If they, if they have a job that sounds like an $80,000 job, which is a great salary, above median salary,
right.
But you're selling them a $2 million home, there could be a disconnect.
Right. So
we want to understand what they do for a living. All right. Now, by the way, if they're in a position where maybe they make a few $100,000 a year, but they're buying a $300,000 or $400,000 property, that's also curious. You want to just understand what they do. Here's something else, though. Where do they live? Okay. Why are they making the move they're making? Why is that move important to them? Are they currently renting or are they buying?
So if I'm buying a house and I'm trying to buy one of your listings, this is not you don't think this is intrusive? You were asking a lot of intrusive questions. I mean, like if I'm a private person, I might not want to tell you all this stuff.
You want me to put my house under contract with you. You don't want me to know who you are. In business, people know who they're doing business with.
Right.
When you hear about these companies, in the media, like big transactions happening. This company just bought that company. The reason those transactions take as long as they take is because they're figuring out who they are. They're figuring out what do your due diligence. What do your financials really look like? What is your intent with it? Right. So you want to understand who are they?
Okay. What's next?
And there's ways to use that information the right way. So maybe you have multiple offers on your home.
Right.
But one of the offers is from somebody who was renting. And they've given notice, and they're literally out. 30 days from now, they're out of their home. Maybe or to paint a different picture, maybe one of your offers is from somebody who's just relocated here from Chicago and is living in temporary corporate housing. Your other offer is from somebody who lives in a very nice home. They're super comfortable, They kind of just would like a bigger home. They just kind of would like a bigger home. Or maybe they're downsizing. They just kind of like a smaller home. The offers are $5,000 different, $3,000 different. And the one that's higher happens to be this person that would just kind of like a bigger home or like a smaller home. Mm-hmm. Who do you think you might have more leverage with once you're actually under contract, once you're negotiating repairs, inspection issues, disclosure issues, termite issues? Do you think that you have more leverage with that person that's sitting there rotting away at corporate housing or with this person that would just kind of like another home? All right, so what looked like a $3,000 better offer in the beginning might actually turn into less value once you're done negotiating all of the other things that come into play. Because most buyers and sellers, especially most sellers, are looking at that first number that comes across their table.
Right.
But what really matters is the complete picture, okay? What's their name? What's the name of the person you're going to do business with right now? Have you Googled them? Have you looked them up? Do you know their MO? Can you figure out who you know that they know? Can you reach out to that person, find out more about them, figure out what motivates them?
It's a little creepy.
Absolutely, it's the most necessary. This is not, by the way, what you should be doing, but rather what your agent does for you.
Right.
Okay? You have the option of deciding if you're going to...
So when you present the offer to your seller, you guys have done all this back.
This is what must be done.
Got it.
You as a consumer have the option, okay? If you're a seller, you have the option of working with someone that's simply going to open doors and present whatever offers comes across the table, or you have the option of working with someone that is your agent going out to actually uncover all of this and get you a negotiating advantage. If you're a buyer, you have the option of simply working with a door opener or working with a professional buyer specialist that goes in, digs his heels down, her heels down, and pushes to find the right property regardless of if it's on the market or not, and then understand the motivation of the seller.
So when you're so let me ask this question. Let me flip the switch on you. So if I work with one of your buyer specialists, do they provide all this information up front when they present
So on
their
the
offer?
buyer side, it's going to be similar but different, okay? And by the way, if you want to connect with us, you want a phone number here to call in, Daniel Beer, Todd Pianin. The number's 800-676-2420. Here's the deal. You might have a buying question or selling question or a buying need or selling need. You may also just have a question on a bathroom remodel or something else. That's fine. Give us a shout. We're happy to help in any way we can. That's our promise to you. 800-676-2420. So Todd, you're asking me
So when your buyer specialists are presenting an offer on, let's say I'm working with one of your buyer specialists, I want to buy a home. Are they providing all this information up front to the listing agent?
You don't think? Oh yeah, it would be very valuable information if you're a buyer. Sorry. Are they providing this up front to the listing agent?
Yeah.
No, absolutely not. Your buyer specialist, if you're buying, your buyer specialist, their job isn't to volunteer all the chips and show your hand.
Right.
Their job is to protect you and to go get as much information as they can from the seller. So if you're a buyer...
So they're doing the exact opposite almost on the seller. They're kind of doing some due diligence on the seller.
Oh, yeah. Wouldn't it be valuable to understand why the seller's selling? What's their big need? What's their big why? What motivates them? Are they trying to get to Arizona, before the end of fall because their parent is sick and they need to get there and help them out? Would that be valuable information when negotiating the last $5,000 or $10,000?
This is amazing stuff that you're giving out right now. I mean, this is stuff that I didn't even think about.
You have to get to someone's big why. What's driving them, right? When you know that your seller is, relocating
or whatever.
Yeah, they have to get to wherever it's going to be, and you've just done your inspection, and you're trying to figure out what you should ask for, and if you can maybe get an additional $1,000 or $2,000 credit, and your agent says, "Oh, well, we wouldn't want to ruffle their feathers and lose the deal." Well, you wouldn't be afraid if you knew why they were motivated.
Do most listing agents give up the information to your buyer specialists?
Oh yeah. Why are they selling? Yeah, they'll tell you. They'll tell you why they're moving, where they're going, etc. Here's the cool thing too.
So will you guys? Will you on the other side? Will you give that information up?
On the listing side, when we're representing a seller, we'll try to we'll give an honest answer, but it's going to be more vague. See, because here's the reality.
You know what's going on.
People feel like there's a law and a rule that you have to answer every question in that regard.
Right.
But disclosing why your client's selling, as long as it isn't a material fact of the property itself.
Right.
That if it's only just simply a personal issue going on in their personal life, that's not relevant to the transaction, and you don't have to answer the question. We're going to go to break here. You're listening to Real Estate Exposed. We'll continue the conversation. How do you get an edge buying or selling property in San Diego County? That's the question. Call us, reach out. Daniel Beer Group, happy to help you. Todd Pianin and his team at Home Street Bank, the best lenders I know in San Diego County. And the number's 800-676-2420. 800-676-2420. So you're buying or you're selling a home and you want an advantage in today's market. That's what we're talking about here on Real Estate Exposed, going into our final segment with Daniel Beer and Todd Pianin. When you're buying or selling a home, you need a professional that's not afraid to ask the tough questions and dig deep. Why and what is behind the motivation of the person you're negotiating against. Okay? Nobody moves just 'cause. There's a reason. And it's your job, or specifically your agent's job, to uncover the reason. And that, my friend, will give you a negotiating advantage.
So you should be pushing your real estate agent,
or just hiring. I mean, if you need to push them, you probably want to hire someone different.
Right.
Okay. That's just what they should do.
That's what they should be doing. They should be presenting to you. Got it.
We went through that in pretty good detail in the last segment. Now, what I find is, or the question to you, Todd, just because I know what happens in the marketplace, is people will show up with a pre-approval letter from some lender, some bank, but then the financing never really comes together. And that sometimes takes people by surprise or by shock. Can explain, why does that happen? Like, why is it that sometimes you'll have this pre-approval letter from a buyer, they get under contract, but then the financing doesn't come together? And we're talking about pre-approval letters coming from other institutions other than yours, because with you guys, we've literally, and this is a literal fact, never had it happen. But we do see it happen outside of you guys, outside of your team, Todd Pian and Taisha Lindsay at Home Street Bank. Why does that happen? Because for most people, that's a very confusing concept, because there was already a pre-approval letter. How can that be? There seems to be a disconnect there.
So I can give you a real life example. I told you, I think we talked about last week, Dan, that we had a client that called me on a Sunday, gave me all his information. Basically, on paper, he is qualified, but he just got his green card only 12 months ago, and so he has limited credit, right? For the sake of argument, so we take, a lot of people don't like working or not working with us, but a lot of people don't like the amount of information that we request, because when we do a pre-qualification or a pre-approval, we ask for a lot of information, and then we also will run, we call it DU, which is basically a Fannie Mae approval.
So isn't that what other lenders should be doing?
That's what they should be doing.
So what really happened?
So what happened was he gave me all the information based on what he was telling me. He sounded like I would pre-approve him, but I said, send me all your stuff. Let me run a DU. Monday morning, I ran the DU, and guess what? Didn't have enough credit, didn't have a long enough credit history. We couldn't get him approved.
So am I interpreting this that a lot of lenders, especially, lending is very much like real estate, in that on the real estate side, your average agent is going to do 3 or 4 deals a year, so they get really excited when that deal shows up.
Correct.
Is that the same thing on the lending side, where the lender just gets excited and they don't thoroughly go through the paperwork?
They have a purchase. They're excited. I mean, Taisha, I do 88% of our business.
But how can you put a pre-approval letter together if that's not, so they're just not digging deep and asking the right questions?
They haven't been in the business long enough either, I would say to you, too, because I would say also that, meaning that they don't know the fallout rate of what can happen or what can go wrong. They also don't value their real estate agent or the real estate agents involved in the transaction, because there's a lot of money and time that's spent when, I'm marketing a home or putting somebody in escrow on a house, and they, all they care about is just getting that deal into escrow. I mean, if you ask your mortgage professional, how long have you been doing mortgages? Most of them are going to tell you 2 to 3 years.
So what are the right questions that you're asking that maybe someone else isn't asking, that's going to unearth whether or not that person truly is approved for the loan?
We ask them for a copy of their credit report if they don't, or we ask if we could run their credit report.
So you ask for hard proof.
We ask for 2 years tax returns or 2 years W-2s, recent pay stubs.
And that's before your pre-approval letter ever gets issued.
Before it even gets issued.
Which is a clear answer to the question of why your deals never fall out for us for lending issues.
Correct.
And it's because it's a true pre-approval.
Correct.
You've really vetted the financials.
Now, here's the piece you don't want to hear. Is the piece you don't want to hear is a lot of times they'll work with their friends. So let's say they've released their loan contingency, but now all of a sudden we're talking about the negotiation pieces that you and I have talked about. You're not the selling agent's not budging on replacing the dishwasher or replacing the garbage disposal for the sake of argument. They'll call and they'll call their lender, who's their buddy, their cousin, their friend, and they'll ask them to deny their loan.
Jeez. So that's exactly why we make sure that every loan is cross-qualified with a lender we trust. We just happen to use Todd and his team. You have to make sure your listing agent is cross-qualifying every offer with a lender that they trust. But Todd, and really quickly here, because we just have a few, about another minute. There also has to be fallout, I would imagine, in that people end up making bad decisions, like, they all of a sudden buy a new car in the middle of escrow, or they quit their job.
Right.
You coach them on things to not do.
Correct, 100%. I mean,
that other people aren't coaching their clients on.
Correct. So we tell them not to make any big purchases, not to open up any new credit lines. We make sure that don't move money around. We explain to them how this could blow a whole deal up, all that kind of stuff. So yes, we coach them and give them the information needed. Yes, for sure.
So you're listening to Real Estate Exposed, Daniel Beer and Todd Pian, and remember, your free market positioning report is available to you. It's the only place you can get one. Okay, everyone else, they're running around with their CMA. How many CMAs have you seen over the course of your life? Only 1,000. Visit valuesinsandiego.com for a market positioning report. It's the only way to strategically understand how to price for success. I'm Daniel Beer, Keller Williams Realty, and the Daniel Beer Group.
Todd Pian at Home Street Bank. Member FDIC, Equal Housing Lender, MLS ID number 304014. Great Sunday.